Feeling, chat. Start in just a second here. Push these. Let me check the studio. Good morning, Zeke. How we feeling? Video and sound good. Thank you, Phil. Appreciate that. All right, ladies and germs. Give me 1 second here and we'll jump right in. How's it going, Anika? All right. All right, gonna get started, ladies and germs. Here we go. Welcome, everyone, to the Tools of the Trade live stream. I'm your host, Captain Cole, and I'm joined by my co-host, Trip, also known as Crypto ISO on Crypto Twitter. We got an awesome episode for you guys planned today. Unfortunately, our guest could not make it today, but we will reschedule and have him back in a few short weeks. Before we get started, would all of our amazing subscribers do me a favor, hit the like button, make sure to subscribe, make us look good for that YouTube algorithm. Once again, we want to thank our sponsor Phemex, one of the only non-KYC derivatives exchanges left in crypto. Trip and I have been trading there for quite some time now, and the liquidity has been great. So we suggest you all come trade with us over on Phemex.site. Check the link in the description below. Last thing I'll say before we get started is that nothing we say here on Tools of the Trade is to be considered financial advice. We are not financial advisors. This information is for educational purposes only. All right, now that I'm done chilling and getting that out of the way, Trip, how you doing, my man?
I'm good. Can you hear me okay?
Hear you just fine, man. Good to have you. How was skiing?
It was good. We're closing out the ski season, but we got, I don't know, probably over 40 days on skis, which is pretty solid.
Awesome.
Rounded it out in Europe. Hadn't skied in the Alps in a while. So it was fun. It's like a good cultural experience over there. The opera scene's pretty sweet. Mountains are enormous, so it's like it's way different than the US vibe, but it's good to be back on the screens, talk markets. I think we have some pretty pivotal moments coming up on the macro front. People are trying to figure out what's going on. The market's basically playing chicken with the Fed at this point. Looks like It's calling its bluff, and Bitcoin and crypto are in this really unique situation that, you know, stems back to the genesis of why it was created. Obviously with, you know, bank insolvencies and the bank runs, like this is like kind of what original maxis, you know, had talked about. And you know, it's funny, like coming into crypto in 2017 and, you know, doing your research and understanding the history of it, particularly to Bitcoin, and the strong beliefs of like, this is the moment when it's time to shine. And we're kind of seeing it. And it's interesting because we have like, not only it's like this double whammy of a risk on market, as seen kind of with what equities are doing, but you're also getting the tailwind of why crypto was created and Bitcoin in particular, and it's obviously very you know, clear from the outperformance. And you know, it's been a while since we've seen like Bitcoin dominance up so much, where alts getting Bitcoin's going up, like ETH BTC kind of brings you back to like days of like when we traded altcoins and you're like, all right, wait for Bitcoin to make the move, then ETH BTC, and then you play catch up. Like, are we going to see that, or is like this a new era for Bitcoin because of what's going on essentially with regional banks and people you know, scared to have their money in them? So yeah, it's a pretty fascinating time to be trading.
Absolutely.
It's pretty wild, just like news flow on a daily basis, and like it's, to be honest, it's very confusing to me. So I try to stick to the level by level stuff and not become too bearish or bullish in some instances, because we are coming into key resistance levels and whatnot. But we can talk about all this. But yes,
for sure.
I think
Yeah,
everyone's looking
let's
for some sort of guidance.
yeah, right. FOMC tomorrow. So I think let's start off with like the macro picture. I'd love for you to kind of share your screen trip and kind of give us the overview of what you're looking at for the DXY and like how we're kind of approaching the market moving forward, going into tomorrow, especially.
Yeah, I mean, I think outside of like, charts and whatnot, the market is anticipating the the Fed to, not necessarily pivot, but pause or have some sort of dovish language in regard to like rates going forward. I'm not entirely sure that's going to be the case.
What's the expectation for tomorrow? What do you think?
Uh,
Are we
what
getting
is my
25? Are we getting 0? Are we getting 50?
Yeah, I mean, it's like 25, is kind of where I think it's probably gonna settle. I don't think they're gonna say like, "Yeah, we're gonna stop raising." I don't know, the demeanor and language of Jerome is gonna be key, so that's in the press conference. I believe it's at 1 PM also because the
Oh, it's not
clocks
a 2.
changed.
It's good
If
to
you
keep in
go,
mind.
uh yeah, look, so 1 PM is when you get the decision, and then the presser's at 1:30, right? So we're used to the 2 and the 2:30.
We
Um,
gotta be at the battle stations by 12. I see that.
yeah. So, um, yeah, honestly, I'm not like swayed too far in either direction. Um, it's kind of like a wait and see thing for me.
Yep.
I do know that like almost all of these, you get a whipsaw, right?
Absolutely. The
So
Darth
there's
Maul, right? That's like what we haven't seen a Darth Maul in quite some time. So I think this is gonna be the quote unquote big one, right?
yeah. So the other interesting thing about this whole setup right now and like BTC in particular and whatnot, like there's only 8.4 billion in longs, right? And we're
Yep.
sitting at 28K. Like I've been very surprised at how low the notional amount is on these deltas. Like ETH is probably less. Like it was like 1.5 billion in longs the other day. Like a week ago it was like 25 to 30, right? So it
Yeah.
either tells you there's a lot of spot buying, and that's like a pretty organic thing for price appreciation, or it's people are sidelined. They're not necessarily taking on margin positions because, as I said, like I don't know, it's a complete coin flip on like how this is going to resolve.
Yep. Agreed.
Um, but yeah, like the DXY in particular, I mean, we kind of talked about some levels like last stream, like it was up here at 105 and we were
Entering the
looking at
cloud,
like
right?
107. But now you're below the Tenkin, you're sitting on the Kijun,
June. Yep.
like,
Daily support, basically. Mean reversion.
yeah, so and you have some serious strength in equities. I mean, look at the Nasdaq. If this is any indication of tech and crypto, like, all right, like this looks like it wants to go higher, but it's such a binary event on what's going to happen tomorrow. I think it's more important than any of the ones we've seen, just particular to like what the Fed has said in terms of increasing dollar liquidity on the swap basis. So like that's being taken as a uh, essentially QE. I mean, we've seen Arthur talk
Yep.
about this, a bunch of people talking about this. So getting some clarity around that, but it's probably like still very dependent on like what inflation data comes in and how they deal with rates going forward. But for what happened with Silicon Valley and these other banks,
Yep.
from a higher rate standpoint, like people think that is like an indication of like, well, the Fed can't keep up at this pace, or it's going to be detrimental in that regard. So I try not to get too mixed up in a lot of the noise because like everyone's throwing their opinions around. I've kind of stepped back from that and just tried to like focus mainly on charts and liquidity, and pick
All
off.
liquidity games right now, man. Everything
Yeah,
is level to level. You should be pretty aggressive with your, profit taking and your targets, even, right? Like we have seen that we've been in this, bull run. Echo bubble is quote unquote over, in my opinion. Are we starting the next part of the, new cycle? I don't know. But the trade right now, if you weren't long from the 20Ks and you're kind of sidelined here, it's like, what do I do now? Well, and I see like you're showing your chart some nines. Like we have had a 45% move on Bitcoin from the lows. So, from here to 30K, 31, 32K, there is significant resistance. I am in the camp we probably do go higher, but I do think we need to be cautious, especially going into tomorrow, right? One thing I really like to talk about and like kind of advise traders is don't anticipate the market, react to it. So, if you're positioning now before FOMC with any, deeper, longer swing trades at these levels, you're very likely going to feel a good amount of pain moving forward, just because tomorrow, like we said, we're likely going to see a Darth Maul, right? It's going to rip one way, rip the other way, and then pick a direction. So, all of the over leveraged participants are going to be in a world full of pain positioning prior. So I think going into FOMC tomorrow, the key is to be flat, see what the data comes in, see the way the price is going to move, and then kind of react accordingly. You can have a bias going into it, right? Like, for example, if I'm bullish bias, I'd love a dip, to say 26, 21, 26.1, 26.5K, and we can like get into that in a second. But point being is, if I have a bias, I have a level I want to see. If I see price nuke into that level really quickly after, the decision is made, that's probably where I'm going to react and execute, take a long there, see what I can kind of pull from the market. But that's kind of how I'm going to approach FOMC tomorrow. What are your thoughts, I guess, in terms of positioning in with alts moving forward? Because again, today we had that nice ETH BTC move off the order block. Actually, I'll show that real quick. I shared this the other day on Twitter. We had this 3-day order block, and this was a very key level to me. We lost the mid range, and the fact that we came into this order block, we moved up from it. ETH BTC kind of showed some support. We moved back to 65, and ETH had a stronger 4% move, while Bitcoin only had a 2% move on the day. So I think it would behoove us to kind of determine who is in control moving forward. But if ETH BTC is going to hold this level, I think it does set the stage for a nice alt rally going forward into the later part of the week.
Yeah. Going back to like, okay, BTC does its move, and then I don't really look at Bitcoin dominance, but I did see
It's
some
a meme in my opinion. I always say that to people. I would never trade off it, just because it's constantly diluted by new ICOs, new tokens coming into the market. It's not, in my opinion, an accurate metric, although some people may vehemently disagree with that statement.
Yeah, maybe it's self-fulfilling, but like, all right, like if we're just looking at a range here, right? Like, I don't know, like just if we're looking at charts, like
We're doing TA on the BTC Dom, guys.
we've gone up significantly here. So I don't know, maybe it's like 48% or something.
Yep.
Like, I know XO uses like the dominant stuff a lot, and like total market cap and all those things, but yeah, sure. Like, back to kind of what I just talked about, like BTC made its move. Does ETH BTC catch up and then alts catch up? Like, I mean, if you're looking at this, like, sure, then that's
if you're playing the range, we're at the upper end of the range, and
a viable argument. I don't look at this really ever, but it just made me kind of think about it. But like BTC to me, it's like it's broke above this, like this diagonal here.
Yep.
Kind of consolidating up here. There's a lot of nines floating around, but like I've seen nines.
Yeah, talk to people real quick, Trip, about those nines, because that's something you have really good experience with, and it's kind of helped you catch a few market tops and bottoms. Just give people a brief overview of what like this Tom DeMark indicator is, and how you can use it to hopefully potentially catch potential pivot points in the market.
Yeah, I mean, I was waiting for this nine down here, and did I think it was going to go all the way up here and print another?
I did.
Yeah, you did. And so basically it's a indication of exhaustion. All right. So it's going to happen on buying or selling. So
yep.
It's based on a count. So it's going to go from 1 to 9. And the way that the count works is, I believe it's every 3 candles before it's either lower or higher that you're going to get the next number down. So if you have like it's called TD sequential, right?
Yep.
So you print the 9, and then the way you trade it is like, you essentially, once you get a green 1, that means your count has started up, right? So it stalled here kind of with a doji. So like technically you weren't necessarily supposed to enter until you got this, but if you did, right, you're entering maybe it's when the one starts. So you're either down here sub 21, like in this candle, right? And then you can see 2, 3, 4, 5, 6, 7, 8, 9. So that's a full count. So, you know, for this to reverse, maybe you have one of these and then you get a red 1. But if it doesn't reverse and it keeps going up, then like the 9 is essentially invalidated. And so if you look at ETH, like, you know, like these are similar instances. Hold on. I think my screen's like, is it lagging or just?
No, you're good. Yeah, you're good.
So, you know, we had the same thing down here, right? Like here's the 9. It was a day later than BTC. And now here's our 9 here. The one rule I'll say is that you want the 9 to be above the 6. And so the 6 wick is here. It's slightly above it. But you need a red 1 to see follow through down. And like this candle right now is engulfing this 9 right now. So I've seen 9s fail. The more people I hear talk about 9s, the more likely they are to fail. There was like no one talking about these 9s. I mean, we were talking about them, but like I had kind of waited for a lot of those 9s, and even on so this one is actually pretty interesting. This is Bitcoin versus ES, right? So you had your 9 up here, and now you actually have a red 1, right? So is this the start of Bitcoin underperforming, you know,
S&P?
Yeah, right. And you obviously, this is an interesting move pre FOMC. This is telling you that like the market is essentially anticipating dovish commentary from the Fed and some sort of pause, right? So they're trying to front run it. I mean, but you know, obviously Bitcoin has it up 100 basis points, but okay, you're up 130 basis points over here. ETH, I mean, you could chart ETH versus ES, and that's probably going to look much better. But yeah, the 9s are in the simplest form a way to measure exhaustion points. So either on sellers or buyers.
Yep.
And the follow through you need to see in either a green 1 or a red 1, and then that count can last however long. So definitely something I use a lot in execution alongside liquidity, of like it gives me more confidence in maybe, you know, I'm sure some people could use like RSI. Like I like to use the Stoke RSI with the 9. So like if you're getting a cross up on this with a 9, that's like showing you like almost double exhaustion. Here, like you want to see it crossing down. It's like almost crossing back up here. So that's why I kind of think these 9s might invalidate. And this could, you know,
just rip up from that diag.
Yeah, because just like consolidating above here is like pretty interesting to me. Like the 1, 2, 3, 4 days where like usually I feel like deviation maybe happens quicker. But watch me eat my words tomorrow and this whole thing crashes. But I don't know. I think people are quick to want to short the market.
Agreed.
The deltas to me are not so clear as like, here's a ton of people off sides. Like I'd rather see 30 billion in longs up here and have more confidence in a deviation and this 9 rolling over than like 8.5 billion in longs. Like you don't have to nuke that many to get a red delta. Like we saw ETH get flipped red today. I think like
oh, it did? Wow.
At one point, let me see. I remember someone talking about it in Fishing Club. Hold on. Let's see. I haven't looked at the ETH delta, but yeah. See?
Oh wow. Yeah. Wow. That's such a buy signal, right? And I think just to, you know, take a
So there's
quick
only
peek in the side.
950 million in longs on ETH. Like this, to me, it's like a very weird scenario right now. Like I've not seen this too often. So yeah, it's either just a lot of sideline people or it's very spot driven, which is kind of really bullish in that regard.
Yes.
So we'll see. But yeah, I mean, like, look, like people got bearish and then boom, you know, they bought it up really quickly. So like
One
how
thing I
much?
do want to mention just about that negative delta, right? So I talked about this in a tweet the other day. When you see the delta, the cumulative lick delta, that those bottom red green bars, when that flips from green to red, it means one of two things, in my opinion. One is the trend is changing. If it's green for a long period of time, we're at high time frame resistance. All of a sudden, it gets red. It could signal to me that sellers are stepping in and they might be getting a little over on their skis in terms of positioning on the short side. But the other way that I like to approach it is if I think we're in an uptrending market and I see a big red delta, like that came in at negative 1 billion, that to me provides the optimal entry point to get back into the trend, which I believe is up in that case, right? And it's basically providing you the maximum financial opportunity to say, okay, well, all of a sudden the market just got really net short on derivatives on this asset that looks like it's been a spot rally. So it behooved me to at least take a punt at that level and set some sort of logical stop, maybe at a swing point or somewhere lower, not at the liquidation point. But you can use that essentially as a sort of like how I would use backwardation and contango to kind of look at BTC and from the futures perspective. When I'm looking at the margin perspective and I see a lot of shorts come in at the lows where I believe the trend is still up, that's usually a good a time as any to take longs. So I just wanted to kind of mention that about the lick delta and how we can kind of use that to potentially gain some edge when the market positioning seems offsides in what seems to be a trending environment.
Yeah, and like to piggyback on that, like, my checklist is high notional cumulative lick delta, like very favorable ratio that's skewed to one side. Um, and like it often matches up like with a range at support or resistance. Like this is pretty split, right? So it's like
Yep.
I'm not like so excited about either like the BTC or ETH delta trade or just looking at it, like trying to analyze it because we're kind of just like chopping around. But yeah, I mean, like if we want to talk about a great example, like OP yesterday,
Yep.
it was like literally there was 2 liquidations left, and
And it went for them too.
what?
It went for them too.
It went for the 240, and I
Yep.
was like, this can go to 240, but it in theory, like everything that I look at, and the most important thing is how the positioning is at the lows, right? So yesterday, this was was it here? Yeah,
Yeah.
240,
Yeah.
basically. We put it
Yeah, you
all
and
in
I were
the
scalping like 253 or 250 and then 253. I think I puked it for like a small win. And then went a little lower and then obviously ripped up. I didn't catch that move. I know you did though.
I was 245 or something like that, and I was like, it was pretty low leverage, and I was just like, you know what? It could go to 240, but if it doesn't go to 240, like it has literally like all this liquidity. I thought it was going to go to 265. It went to like 274 or something.
Yep.
And
Yeah, ran all those licks on the left there.
yeah, and it was because you had short, 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 short. Like there
You
was
know,
actually no
wait.
long. There was no
one thing,
longs coming in.
one thing to note there. See how the delta flips green at the Pico top?
Oh, this?
Yeah. So again, if you think it's trending down, that kind of provided you the optimal spot to kind of get in when you see all the longs piling in at the Pico top at 270s. That gave you the if you had a short bias, that gave you the optimal point to kind of get back in, seeing as all the shorts got ran there, delta flipped green, top buyers coming in. And it was really just a lower high in the grand scheme of things.
Yeah, totally. But like the market, it had no more fuel to go down. Like it
Yes.
started going up and there was no longs coming in. And I was like, all right, like just it seems like it has to squeeze. And sure enough, just ran like shorts all morning, like
Yep.
really quick. And then you saw all of these longs come in, like long, 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 like
Yeah,
all
can
the
we
way up
zoom in
here.
there for a second, Trip, just to kind of give people an overview with these, red, green dots we kind of talk about,
Yeah.
and like what we see with that and how we kind of use that to kind of understand the positioning in the market and then how we can potentially trade off that positioning.
Yeah, I mean, um, so for the newcomers here, right? These green dots, um, and these red dots. So green is a
Market
long.
buy.
It says right there, like it says long next to it. So that's um how Hyblock does this. These are actual positions opening at market, and it'll tell you the size. And the green is a representation of a long opening. So you have longs literally buying all the way up, like literally like all the way up. And each one of these circles is representing the liquidation price if price came back down to it. So it went up to 272, and you had all these green longs come in, like this inefficiency.
Yep.
Well, guess what? It gets filled back quick. And then you have some guy short here, and then it runs them, right? So like the best way to read these charts is delta. Yes, you look at the ratios, but the secret sauce to this for me is, in figuring out if I really want to step into a position, is how people are entering around support and resistance. Like these are top buyers.
Yep.
By definition, these are top buyers,
Exactly.
right? And you can drop the granularity on this, by the way, just so you have less noise. And you can see, like, fine, there's 2 million in shorts at 242.
But they came in at support. I think that's the important part to get across. When shorts open at support and they're not immediately rewarded by price going lower, they're going to puke and unwind their positions. And I think that's key to understand. If you see a bunch of longs coming in at support trying to defend that support, there's only so much buying power that they can provide. But if you see red dots, meaning shorts are opening up at support, trying to break that level, and the price does not seem to go down, they are very likely going to unwind those positions, and they unwind so by buying their position back to the upside.
Yeah. And you can see here, this long, 243. So what you do is this is the
zoom in a little bit more just so you can see like the right there. Yeah.
Hold on.
Just like the box itself. Yeah. Just that little area.
Yeah. Show you this. So this long, can you guys see this?
Yep.
1.41 million at 2.43 price, right? So the lick on that, because if we're looking at the highest leverage point, right, like where they lick, is 241. So he got hit, and then next below that was 240. So literally, this was the long at the bottom. They licked him. And this short here was 2.8, triggered at 2.4 and 2.46, and then you got like this move up, right? And then okay, there are some longs that came in, and like these are the ones that basically bought it at the top, and then we came back down to run them. So if we're just looking at this like right now, the last long was here, 262, and that's 2.3 million. So you literally can like match these up. So went to 260, got hit. So at 259, there's still a lick, and then below that, 253, right? But you have a short that came in 261, 2.4. So he's going to lick 263 and then 264. So I wouldn't be surprised if we hit this, right? So you can really start to dissect the positioning of like actual market participants and where they enter, and dial in more of like how you want to take advantage of their liquidation and either buy or sell it.
Exactly.
But it's really at the extremes that I look for a lot of shorts coming in the lows and a red delta, or a lot of longs coming in at the top with a really big green delta, meaning someone's offsides and there's going to be a reversal. That's like the best way to explain kind of liquidity theory. And then you're looking at.
I want to take a second. Hold on. I want to take a second to kind of just like dissect liquidity theory for a lot of people. So liquidity theory is really just the way Trip and I kind of like to understand the market and the participants involved, right? So when we talk about liquidation levels and the way traders get liquidated, retail participating with certain degrees of leverage, a lot of this stuff some people who are order flow or market profile traders will see this in the footprint and the delta and stuff. But this is just a neat way that, look, I don't understand order flow as well, and I don't pretend to be an expert at it, and neither does Trip. But Hyblock has allowed us to kind of utilize our understanding of liquidity theory, which is basically combining liquidation levels of over leveraged participants and then game theory behind creating larger positions. And the way you kind of assess that is when you see a trader come in, or it doesn't matter if there's a big trade or small trader, regardless, if you see a short come in at support and they're not instantly rewarded, they will most likely puke and unwind that position. The same goes in the reverse. If you see, longs coming in at resistance and they're not being rewarded immediately, they're going to puke and unwind their positions. And the chart we just looked at, the Trip showed, you saw those longs coming in as price was going up. They don't puke because they are getting rewarded. As the trend unwinds and those shorts puke and longs come in, those initial early longs get rewarded with higher prices. So they don't end up puking those positions. So I think that's a key thing to understand, is that liquidity theory helps us understand how the market is positioned. And then when we understand the positioning and we put that with context of support and resistance levels, we get a better idea of how price may trade, right? It's not a magic toolbox. It's not like a 100% hit rate thing. It's not like that, but it helps us understand the context of the market positioning. So I just want to kind of hammer that into you guys.
Yeah, I mean, I'll just pull up the thread so people can understand why I basically highlighted this whole thing. OP shorts at the bottom and exhausting long wicks. So if you actually click this, here's what we saw in real time.
Yep.
There's 54 shorts to 4 longs. And if we kind of look at this and we say, well, what did we just talk about? Shorts coming in at the bottom. 1, 2, 3, 4, 5. These longs already got liquidated, basically. So the next lick was literally this and this. And you have a red delta with the spike. And so you're asking yourself, okay, well, who's vulnerable in this regard? And then, we can look at basically what I just said about TD. Okay, well, here was a buy. This is a TD9, basically signaling this could reverse. There's another exhaustion point.
Yep. So you're seeing exhaustion on the hourly, and then you're pairing that with Hyblock to see there's actually shorts coming in, seller exhaustion at the bottom, at support coming in, which adds more confluence. Okay, the max pain trade right now is probably to the upside.
Yeah, and then it says there's 2 long licks left, 245, 240. I mean, I've never seen it get to 0, really. No fresh longs added. This is the important part. Longs came in after hitting 240. So now you start to see we hit the 240 and now people are longing it, right? And this is where how do you trade out of this? Well, you can pull a fib on this down to here. Okay, what's a 61.8? You can start to target particular liquidations. This area right here seemed like kind of resistance to me. So that's your 260. That's where kind of got out of it. And sure enough, you can see this on the chart. This is literally what I was anticipating. Did I think it was going to go all the way up here? No, but that's
you caught the meat of the move. And again, as traders all week, we're not going to catch tops and bottoms. It doesn't mean much at the margin to our P&L. We just try to catch the meat of the move. And again, as Trip's showing right there, right? So you saw the unwind from the shorts, and then obviously a lot of longs came in at the top, but that's the move from 240 to 260. That's a beautiful move.
Yeah, and look, all these new bubbles and these green circles are trapped longs. And then we obviously saw what happened. And you can see how the delta is getting smaller here because it's literally removing shorts from the market. And that's going to show up in your ratio up here. Look, 57 to 45. Literally, there was 2 longs, and now there's 43 that came into market. So I just wanted to kind of go over this, not saying we nailed it, but this is how.
Just to give people an understanding of how we kind of approach the market, and why we tend to take trades only when we see certain confluences, because as traders, the best we can do is try to find an edge, any kind of edge, and this is kind of what Trip and I bread and butter is liquidity theory. So I'm going to pivot for a second now, Trip, and talk about Bitcoin for a little bit, because I think let's talk about the elephant in the room and kind of get into where we've been at, where we are, and kind of where we might be heading next, right? So we've been in this range for quite some time now, 25K to call it, I think we had a deviation if we don't count FTX. One sec. If I cannot fuck up my chart, would be nice.
Would it freeze or something?
Yeah, no, I just opened up the Indy. So yeah, we've been in this range for, what is it now? Just about, almost 9 months, right? And we finally broke out of the range. So, if you want to take the range high, let's just call it pre-FTX, 25.2 range low, 17.5. We have the yearly open somewhere around there, right? Like 16.5-ish. Yeah, 16.6. So we broke out of this range, right? We had a nice SFP right under. We had this huge consolidation between 21 to 24K, call it. We nuked down to 20K. We came into this pivot right into the Tenkin, and this is kind of where we had to move back up, right? So from top to bottom, from 19K to today, 46% move. Great. So what does that mean for where we're heading next? Is a new cycle started? Has the echo bubble done? Is the bottom in, quote unquote? When we talk about the echo bubble, and I think, Trip, we discussed this a lot on stream, probably in February or actually in January even, about the echo bubble. We talked about like that base not being long enough, right? That we were in this like deviation zone for what, like 50, 60 days, and it's not long enough to start a new bull market. But, if we think for a second, being
270 days is a good amount of time.
270 days is 9 months of accumulation, is definitely enough to start a new bull market, right? So if we want to pretend that this move from 15K to 25K, call it 24K, was the quote unquote bottom, or was the echo bubble, and then it ended here at 19K, and now we've kind of broken out of that range. One thing I want to mention, just point blank staring at this chart, is take note of the Kijun here. So this is the weekly Kijun. This, as I've talked about many times, is mean reversion for the high time frame trend. This Kijun level has not been touched since February of 2021, right here. Sorry, right here. Yeah, February of 2022. Sorry. So it's been over a year since we last touched this Kijun level. Now, assuming that price is, or the Kijun is a magnet for price, and it's flattened out until at least May at around 31, 32K. So that to me is a magnet. If, come May, we still haven't gone up to 32K, which again, I don't think that's going to be the case. The Kijun moves down to 29 and so on and so on. But as it stands, for at least the next few months going into the next quarter, the Kijun is flat. This to me is mean reversion for the high time frame downtrend from 69K to 15K. So at minimum, in my mind, this level is going to be touched. It's going to be tapped. I don't know what happens. Is it going to tap, reject, or is it going to, like in 2019, we had a similar thing, just blast right through, flip it, and then continue on to make a new bull trend? I don't know. I'm not going to pretend to know. But what I do know is we've been in this giant range. We finally broke out of it. Everyone and their mother, hopefully, is looking for a retest around 25K, right? Somewhere to get long again. This support holds, and we start the new trend. Now, when we zoom into the 3-day, and this is kind of what, why I took my 20K long, max long, was because, look, we were sitting on the 3-day Kijun right around here. It's a very high risk reward setup. So invalidation goes just below the cloud around 18.5, because that would have been the retest of that, 18.4 deviation range, basically the range low, and we don't want to go back there. And you're targeting the top of the cloud. So again, it's like a 55% move. I closed at 28. That's a 42% move. I was happy with that. Can it still go higher? Absolutely. But one thing to note is that this price, especially, we talked about that diagonal that Trip mentioned, right, from here to here, and it's kind of consolidating. Excuse me. If we go back under, we're probably going to chop around, do something like this, maybe retest this Tenkin wherever it ends up being, and then try to go for 32K. But now that we're kind of sitting here, especially going into FOMC, one thing I want to make note of is when you look at market structure, I talk about this a lot, Trip harps on this a lot, is you need to understand ranging market structure and trending market structure. So trending market structure is higher highs and higher lows, right? And we see that this is the low at 15K. We put in a high around here. We put in a higher low, and now we're putting in a higher high. Market's trending to the upside. So this is just like a high time frame overview. So what I like to do when I'm, let's say, out of a position like I am right now, I'm flat, is I'm looking for SR flips, right? We don't want to see price retest support. We want to see a retest previous resistance and flip it to support. Now, arguably, if we get this 25.2K retest, you just bid it. I really think that's just where you bid. You have some stop below like 23K, and you just long it to 30Ks. But I'm not necessarily in the camp that has to happen. So what I like to do is look at this previous high from 6 days ago at 26.5K. This to me is a level I want to see tapped into, and like, let's say it's swept, maybe slightly, maybe it's front run, maybe it's not. But 26.5 is kind of like the midpoint for me where I want to see price hold moving into FOMC tomorrow. So I'm going to move into the daily just so you guys get a cleaner look. So we have a pivot here at 25.2, but what I really like again is this 26.5 candle, right? So this was the initial move we had. Everyone got really bearish that we SFP'd here, but there was no follow through. So the one thing also to keep in mind when it comes down to SFPs, swing failure patterns is just because price breaks through a level and closes underneath this 25K level, the SFP is not valid until you see follow through and we start breaking down a market structure. We never got that. We just consolidated and then ripped up. So given that, if we zoom in now a little bit to the 6 hour, this to me is a level I want to see us hold. So this 26.6, and I guess let's go down to the hourly because I think it'll be a little more clear. And I'll turn Ichimoku off for a second just to give you guys a little more bread and butter, just simple range trading. So this is a range I drew on Twitter a couple over the weekend. We had this move down to it. I just assumed this was the new range because if we're trending, we're not going to break market structure with lower lows, right? We're just going to go sideways. So we had this move down into 26.6. People thought this was the range from this, high point, which it kind of is, right? Like we kind of ended up bouncing there, but the range was defined by this 26.5, 26.4, or 26.6, sorry, candle. So this to me is the range low. So going into FOMC tomorrow, the way I'm kind of approaching things is, all right, we have the range. We have broken above the range. We came back in, we retested. Last night, we swept this higher low, still held this low, and moved up higher. So if during FOMC I see any sort of sharp move down near 26.6, so maybe it just sweeps it, maybe it goes 26.1, 26.2, and comes back in, that to me is as clear spot as any that I want to get long right there. Just because if I'm in the camp that Bitcoin is starting a new trend, and I'm in the camp that, the 31, 32K Kijun is yet to be touched, the optimal point for me is going to be somewhere around this 26.5 level. Maybe it's a tight stop below 26 because otherwise we're probably going down to 25.2 and consolidating. But for example, if I have this and then we set the target to 31.5 because that is the Kijun, just slight. This is a really clean setup. If we get it, again, not calling for it, but if we get it, this is kind of how I'm approaching and looking into FOMC tomorrow. We have this 26.6 low. We have all these untouched, higher lows, quote unquote. And we run all of them. And we come down at this 26.6 level, or we sweep it just slightly, or if we just front run it, this is the area I'm looking to get long. So I'm going to take a second and pivot over to Hyblock, because when we zoom out for a quick second and we look at the liquidity on BTC, and we talked about, this hasn't been a largely derivative driven rally. It's been spot driven. But I will note is that we still have a lot of untouched licks in the back here. So if we do come back down into these levels and just looking here, the biggest lick I see is at 24.9K. Again, that's a little, it's kind of pushing it, but that I'm not necessarily calling we have to go back there. But we do have untapped licks at 26.1K. We have a cluster here at 26.3K, and we have some 100Xs sitting at 26.5K. So all from 26.1 to 26.5, that lines up nice and neatly with what we just talked about on the chart. That if we sweep this low, this 26.6 low, and we run some stops and we come back into it, that's as good a place as any to get long, in my opinion. So that's kind of my bread and butter and how I'm approaching FOMC tomorrow. I guess at this point we can kind of pivot to some questions if we're getting into that. Let's take a look here.
I think a couple people had questions around some of the Ichimoku.
Oh, sure, yeah. So one person, Jordan Hawkins, asked, can I show my Ichimoku settings? So my Ichimoku settings are, show you real quick. It is 20, 60, 120, 30. The reason being that I use this, and I've talked about this at length in Tools of the Trade Course 2, Module 2, is because I like to double the quote-unquote crypto settings, and I learned that from Josh Olszewicz, who's a great trader. First of all, I learned a lot of my Ichimoku stuff from him, who learned from Chaos Trader 63. But neither here nor there. The reason I double my settings is because it provides less false positives, right? So by doubling the settings right now, if we're looking at, and I'll use the, I'll use the hourly, for example. When I'm looking at the 1 hour price action, what I'm actually seeing here is the 2 hour class on the 1 hour price action. So in theory, right, it's going to give me less signals, but hopefully they're going to have a higher hit rate because I'm smoothing out the indicator. So that's why I use 20, 60, 120, 30. MK Ultra asks, TK clamp completing would be a sell though, right? Not necessarily, right? So the fact that we have this clamp, right, which is basically the TK clamp is, 10kin is the blue line, K is the Kijun. It's called a TK clamp because it kind of creates like a C-like structure in between the two, which is distance. And again, price always wants to come back into mean reversion, which at this point is 31.5. So I do think 31.5 is a good place to de-risk, but I'm not necessarily saying you need to short this level. Could it end up being a good level to short? Maybe. But based on mean reversion, it's a good place for a bull to de-risk, but not necessarily take a short. You could, but I personally will not be taking a short there unless I see some sort of a rejection. And again, I'm not going to just leave an ask on 31.5, 31.8, because again, it could just blow right through, go right to the top of the cloud at 39K. Not calling for that, but that's just kind of how I'm approaching things. What else we got here? Do I think the low's already in at the market? What about recession? So it's interesting, right? So, Trip can talk about the equity side of things, but for me, I'm a crypto native. Crypto is all I know and have traded for the past, several cycles now. The way I see this, and when I look at this, range we just talked about, we're breaking out of a 9-month range. Yeah, that to me is as clear a signal as any that the crypto quote unquote bottom is in. I don't think we'll revisit 15K for quite some time. The way I could see us revisiting 15K, and I'll just kind of put this as a caveat, is, if we go to 100K, an 85% retracement from 100K is 15K. So I guess in my mind, that is when you see 15K. We do have an untapped yearly open at 16.6 or whatever it is, right? Yeah, right here, this little flat level at 16.5. We don't have to come back into here, just like we didn't come back into the yearly open from 2018 until like we had a black swan event, right? So COVID had nuked us back. Are we going to get some recession in 2024 or end of 2023 that takes us back to this 15, 16K level? Potentially. But, I'm a trader first, besides being a BTC maxi. So I'm trading the chart in front of me. And when I look at this weekly chart, I'm frothing to get long. I think the time to sell was 9 months ago, right? We had just straight downtrends for several, basically 18 months of selling. If you survive the last 18 months, you're still here, you're still liquid, you're in a good spot to capitalize on the opportunities moving forward.
Yeah, it's I mean, the chart does not look bearish to me.
No, how could it, man? It really can't, right?
So it's tomorrow's going to be really interesting.
It's definitely a positioning day, right? So again, we have an order block here, which lines up with the Kijun. Like this is as good a place as any to de-risk, but to just anticipate shorting here, what are you playing to? Back to 25K for a 20% move, 20%? Yeah, potentially, but I like to trade with the trends. The trend since the beginning of the year has been up, so I'm generally looking only for swing longs. I think at the margin, where if you're swinging short from here, where's your stop? If you're shorting 31, 32K, where's your stop? Is it all the way up at 42 at 33%? Like, I don't know that I have a clear defined short setup at that 31K price point. Just to blindly leave ask and hope that you can, catch the top. It looks cool on Twitter, but in reality, you're just gambling. You're not really trading the market. The market's saying we're going up. We just had a 26% weekly candle coming off an SFP that didn't even close below the lows there. The trend is up, my friends. So I think it would behoove everyone to kind of stop looking for shorts and look for the easy money plays. Now, if we talk about alts, we can pivot to that in a second. Their alts have been showing weakness on this move back up. They kind of stagnated, right? So there are some good alt shorts to get into when BTC is ripping, just because when BTC is ripping, a lot of liquidity from the market is basically being sucked into Bitcoin. So there are a few good alt shorts to be had. I'll talk about GRT in just a minute, but I think the best thing you can do is kind of get your 2019 playbook out, which is to look at the alt BTC pair that you're looking at. If it looks strong, don't short it. If it looks weak, short it, right? So one thing, I guess, before I let Trip kind of take over and talk about some of the other charts is one thing that I've kind of had to digest over the last several years is learning to stop buying weakness and selling strength, or sorry, fading strength, right? The idea that something is already pumped, so why is it going to pump further? Or the idea that something's weak, it still hasn't pumped yet, it should catch up. you're just playing a laggard, or you're selling into strength, and that usually never works out. You want to trade with the trend. So if something's like Mask the past couple of days was ripping up, all the shorts got destroyed, and it would behoove you to kind of take long positions because the trend was up. It was just an easy money play. Longs made much more money than shorts on that way. In the same way for shorting weak or buying weakness, assuming he was going to catch up. I think I traded Lido when it was sitting at like 228. There were some big sellers in the market like Roomkek and others, and it moves, but like marginally, there was better trades to be had elsewhere. So I guess that's just the last thing I want to say. Trip, why don't you take over and throw up some charts for us?
Yeah, I actually was looking at Lido on the long side, just like this chart. I mean, there's not much rhyme or reason to this thing right now. Like, you can draw this channel. I'm just going to take it away. But from a liquidity standpoint, I thought it was interesting because I noticed there was a lot of shorts on Lido, and we can look at the liquidity here. No, it's got to run it. It's still on BTC. But I guess more importantly, from a valuation standpoint also. But if I like to start with liquidity. So, okay, so fine, there's 64 million in shorts. Yeah, there's some shorts coming in. There's still some longs. But ratio wise, 99 to 18 is like something that becomes kind of attractive to me.
Yep. 5 to 1.
Yeah, if I look at how I've traded Lido basically this whole year, is the fully diluted valuation is 2.4 billion, and the total value locked is 10.6 billion. And if you go here, you can see the breakdown that there's 10.6 billion in ETH. And if you're looking at you can look at USD, and obviously that's going to go up because ETH price is going up. But like here, look, the ETH volume is going up. So people are putting ETH into Lido. That's fundamentally bullish, to me at least. And then you look at this fully diluted ratio, TVL ratio, like 0.2, 0.23. Like, if you go back and look at the chart and like when it's traded well, like it's kind of around that area. So to me, if I look at Lido on a liquidity basis and a fundamental basis, and I look at where this is kind of like in a range, it's basically kind of range, like your range lows, like $2 is defended, right? Like this zone. So here you had essentially come down to 224. It ran it 222, traded up. Based on the ratio, the delta, what I would actually really like to see, which I think would be a great long, is if you get this kind of whipsaw effect, right? Maybe there's a sell-off. You take out these lows, right? If you get 220, 219, let's say, like I would be bidding this because your long liquidation ratio is probably going to go down significantly, and people are going to short this on the way down.
Yep.
If you have a
it'll be like 120 to 5 at that point, right? Something like that.
So if this starts to trade down, like into this region here, and you see red circles coming in and you see shorts coming in, then Lido is a long, in my opinion. And that's something that I'm actually looking at as a trade, based on like what I just explained fundamentally, how it's bullish, and liquidity. And like on a chart, like, are there any... Oh, the other thing that was interesting to me was Lido versus Bitcoin on a daily is printing a TD9 buy with the Stoke all the way down here, potentially crossing. So, your Lido...
Oh, the outperformance. Yep.
Yeah, Lido ETH's on a 7. I don't know what the daily is on the US, but like confluence around the BTC pair is with those signals is something that I look at actually a decent amount when trading altcoins. because the breakout on it like happened, like you could see the outperformance of it versus ETH and BTC. I don't think there's anything favorable there, but this is a TD setup trend line at 207. I mean, you took this low at 224. Like, I mean, this is demand down here. So any area around that region is something that I would be looking to probably try and long. But you had a 9 here on the buy, and so now we're on the count up. We'll see. But I expect some sort of whipsaw around FOMC. So that 219, 221 area, if you get it, and you start to see shorts come in on Lido, and your delta's considerably red, it's probably a good long trade. And it would be very similar to the way the OP set up.
Yep.
And how you take profit around that, you could wait for the delta to flip green, as we saw from OP, and watch longs chase it up. But like, if longs aren't chasing it up, then the trade still has legs to me, because price seeks liquidity, right?
Yep.
It goes in the direction where people are going to get injured the most. How do you remove the market participants? That's how you do it. So I would run it down and then rip it back up. So Lido is an interesting trade right now. For me, on the long side, just kind of looking like that.
Solana's been hot, right? I think it was bid on the other day when everything was dumping, and then it had some sold BTC movement. So that is something I've noticed in the past, I guess, 48 hours that's shown some relative strength. Just because when everything was going down, Solana seemed to catch a bid. So I don't know if that's going to hold or not, but it is something to take note of as a trader when you see a discrepancy in the market or a dislocation where everything's going down, but there's one asset that just for whatever reason is not following suit. That is a sign of relative strength or weakness, depending on the trend. So I guess, Solana is one to keep an eye out on, just because I did notice that the other day. Yeah.
Yeah, like I saw that too, and I was like, why is Solana up 7%?
Yeah.
So I was like, oh, it traded above the 200-day moving average or whatever it was. But like, from a liquidity standpoint, yeah, there's shorts in the market. Is it anything like aggressive? No, 24 million. And like, look, these ratios are pretty split here. So, where do you position around this? I don't necessarily
It's
know.
not clear yet, but if we do get a move down and you see that relative strength holding, it's probably one of the first that's going to catch a bid for a bounce. So sometimes, like, if you're trading, if you're scalping, I want to, quote this with the word scalp, because if you're trying to, trade Bitcoin, catch beta by trading an altcoin that has higher beta, what you do is, when Bitcoin hits the support level, you think it's about to bounce. Well, what do? You bid alt. So, if Bitcoin goes down to this 26.1, 26.5 level and it bounces, well, maybe Solana will be the first thing I bid, just because I saw the relative strength on the way down. And hopefully it maintains that going back down. So that would probably be the first thing asset I'm looking at. Like, if, Bitcoin's going to jump 2%, maybe Solana jumps 5%. So that's kind of just how you have to think about when you're trading relative strength or weakness.
Yeah, maybe it's, I don't know, maybe it's like $20 or something.
Yep.
And then one thing I like to do is, now it's not really clear that this is like a top, but it was pretty clear that this is a low, is I'll just pull fibs on this, and basically, okay, if that was the move, right? If that move happened, like where price could come into, well, that $20 is your 50%, 19 is, basically your 61.8. And then I'll go look at the liquidity on Solana, and I'll say, okay, like obviously there's a lot that can be taken down. Maybe we'll drop the granularity to see if there's anything a little more clear on like particular liquidations. Yeah, like 18 to 17, not that great, but you can source liquidity by taking out this low, this low, this low, this low, coming into maybe it's like 20.8 or something like that, right? That would get you a considerable amount of shorts coming into the market, where this would be obviously a lot higher. And if you see shorts coming in at these lows, then there's probably a good trade to be had back up, right? So it's a theme that, like, this is how we kind of look at why price moves to certain areas and how it can happen. Now, if it comes up here and it's like, we're trading like $24 on Solana because everything spikes for some reason tomorrow.
Market moves up, yeah.
Bitcoin trades. I mean, it's not, we've seen it happen before. Like weird things like the market's trading up today into this event, like equities, right? So if you get here and you get one of these instances, right, where there's 200 million in longs and this ratio is favoring a run to the downside.
Shorts, yep.
Yeah, then you short it. But like the in-between stuff here, and this typically happens around events like this where people are kind of walking on eggshells. They don't want to position too aggressively around it. Then you kind of just have to wait to see, right?
Yep.
So
agreed.
It's going to be interesting. Like Lido's the one that probably has the most shorts right now, like that I find attractive to where if you get a run, but like, I mean, we can go through tons of alts and see. I mean,
yeah, I'm gonna take a quick peek at GRT because that's one that I'm in right now, and someone was asking me about it. So I'm currently in a scalp short on GRT, and let me just zoom out for a second. The reason being is I noticed this is showing relative weakness on the entire move up on Bitcoin, right? So it had the low here from last week, and it didn't even make a higher high. It still made a lower high. And where did it make a lower high? It kind of stopped around the daily Kijun, right? So it tried to flip it. It failed. Mean reversion for the daily Kijun's at 1566 right now. The daily high is 1554. So, the short thesis on GRT, and we'll look at liquidity in just a second. I'll let you even do that one, Trip, for GRT, but I'll just talk about the chart for right now. So looking at, the chart itself and the daily is this was a bearish pivot, and I don't want to see price trade back above this Kijun, which is right now the daily high, 1554, right? So that's kind of my invalidation. I want to see this breakdown. I started shorting a couple days ago as well. I caught some good moves from 1530s down as well. But point being is I believe it's showing relative weakness in relation to Bitcoin. So if I'm going to short an alt, it's going to be something that's weak, not something like Mask or Phantom or other things that have been strong. Looking at the 4 hour, and the reason why I closed a third last night at 1433 or 14.1, sorry, was because it touched the 4 hour Kijun, which again, it broke out, retested it here, and it held. And here we had our second tap. The more level gets tested, the weaker it becomes. But usually the second tap, there's still liquidity. And what did that end up being, right? That Kijun tap was really just a higher low on this order block. So that's why I took profits there and I ended up getting stopped out at 148, I believe it was. When Bitcoin broke down and came back up. So, looking at it on the hourly now, what do we see here? So the trend is down. We've seen this, and I used this as my invalidation yesterday at 0.16, and then I moved it down, and it came into that pivot. It bounced back up, and now where do we see it rejected today? It put in the daily high right now at 1550s, and that is the Kijun, right? So the hourly Kijun is mean reversion for this trend since it put its high in at 1740. So if I'm trading the weakness, and if I'm assuming Bitcoin's going to break down going into tomorrow, that's why I'm taking scalp shorts on GRT. So right now it's really just consolidating between the Tenkin and the Kijun. And looking at it as we move down further and why, assuming Bitcoin's going to break down. So again, my goal right now is not to hold this position going into FOMC. I want to be out of it. I want to take as much of the move as I can, but I do not want to be holding a GRT short going into FOMC. And I guess Trip will show that in just a second, just why it's pretty clear as day why you would not want to be holding shorts going into FOMC. But point being is I'm looking for a break in this market structure. And this market structure is, right here. It's kind of hugging this trend line. You could even say it had this trend line, which it broke. And, this is just a bearish retest on this trend line, which is kind of in the camp I'm in, hence why that 1530 was the invalidation. I don't want to see us trading above that again. So again, this short is BTC dependent. If BTC starts ripping towards 28.5, 26K towards range highs, this short's probably going to get stopped out. But assuming that Bitcoin's going to kind of just chop around and people are going to de-risk going into FOMC, I'm still kind of looking at this to hold this, I guess, 1525. And I talked about why I closed the short around here. This order block seemed as good as any if it was going to reject. It did. I don't want to see it trading back above 1530s. If it gets back around there, I'm probably going to puke the position. But Trip, what are you seeing on Hyblock that we can kind of talk about why it would not be a good idea to hold GRT shorts going into tomorrow?
Yeah, so when we were talking to Vision Club and people were talking about shorting this, I was like, that's not my cup of tea, just because like you have 54 million in shorts.
Yeah.
But like you can see that you had a lot of longs here, right?
Yes.
That are buying it. Like they're longs in the market, but you have some shorts coming in down here. Here's one. So like,
And what do you notice? As soon as you see shorts come in at support or the potential high or low, that's usually when we see, right, they puke. If they don't get rewarded, they puke and price trades back up.
yeah, so this guy, 0.28 million, that's where, so 0.151, and then 0.1526, he gets hit. This long, 36, so basically it licked him.
Yep.
Short came in, traded up a little bit. Like, are we going to hit this? I don't know. It's not like super clear to me. I just see red delta and understand that if you do get a Bitcoin move up, this can.
It's going to run everything up to 17.5, right? So that's why the invalidation is close. I'm not trying to hold these shorts for a giant swing play. If I get it, great. But I'm very cognizant that I am counter trend trading, seeing as the positioning of the market right now is generally short. And if Bitcoin makes a move to the upside, it's just going to tear everything up. So there's no point setting giant wide stops to the upside when a full lick run can be very, very high. So I guess that's kind of the gist of why the GRT short. What I'm looking to get is before FOMC is run the last of those 100 Xers, which are like 141, 144, 145 ish.
Yeah, it typically does that type of stuff too, with
Yes.
the Darth Maul whipsaw.
Exactly.
Yeah, so I don't know, that one will be interesting to see. I don't even know what GRT does.
I have no idea either. All I know is I'm trading it. It's been good to short to the downside when Bitcoin's weak, and that's kind of that's the thesis, right? When Bitcoin's weak or at range high, I short GRT because I'm assuming if it dips down, GRT will dip down more. It's sometimes just that simple of a thesis.
Yeah, so someone asked about HNT because I actually saw this today. I think it's Helium. There's some sort of Wi-Fi play.
I remember Helium,
I don't know
the
what's
Lena
going
Helium
on.
play.
I have no idea, like, really what's going on, but there are 43 million in shorts, and
One single long.
yeah. So this is like what's kind of making everyone wonder, like, what's happening. I don't know. I saw someone in the chat say Binance might be delisting it. I don't know, but yeah, here's the long, 135, right? So, but
Could
like,
still run that, but yeah.
yeah, you also have to understand like where price has to go to start liquidating shorts is like pretty high. Like, there's no immediate liquidity here, which is kind of interesting. I don't know if that's like a glitch or something because there are shorts here, but
they all got ran, I think, on that move up, that like wake up to the
oh, they
mid-range.
got hit right here,
Yeah,
right?
yeah, they
And
all
so
got
it
cleared out.
reversed. Yeah. So I don't know. If you want to buy 135, then you basically have zero longs. And this is just
But
like
the thing is to make sure is that you don't see longs come in again, right? So if you see longs buying support, piling in at support, and price is still like dripping down, they're usually going to puke as well, right? So that's one thing to keep in mind.
yeah. Have you looked at the actual like chart on this ever? Like I don't.
No, I don't even know what HNT. Let's see. Not Binance Futures. Oh, Binance Futures had a huge wick to the downside, but BUSD, Binance. Let's take a peek here. Let's zoom out. Let's see. So, just looking at it, HNT, again, it made lower lows compared to even like the January lows. So it's literally broken structure completely. It's making new all-time lows right now. So based on that, yeah, it's probably going to be ripe for a short squeeze, but it won't be until Bitcoin breaks above 28.5 or 20 or 29K, whatever you want to call it. I don't see this as being like a
Gotta
clear
reclaim
buy.
147.
Yeah, do something, right? It's just like, don't just buy this and pray and hold and hope that everything's going to go great, because the downside is far too great. Once, we're in price discovery to the downside, I think it's very risky to just punt longs here, assuming everything's going to be great.
Do you have TD on
Eventually,
that? I wonder what the daily's on.
I don't have TD, unfortunately. No.
If you go to well, whatever. I can look at it later. I'll see. We'll put it in tools of the trade thing.
Ionis is asking what leverage do you use in BTC and alts. My friend Ionis, I have one thing to say to you, and I'm going to look at you as I say it. Leverage, my friend, is absolutely fucking irrelevant when it comes to trading. All that matters is your position size and your risk. If you're using 5x, 10x, 15x, 20x, 100x, it doesn't matter. The setup is what matters. So, why do I say this? The reason being, if I have a setup and my downside is 2%, and I'm looking at an upside of 4%, a 2-to-1 risk reward ratio. At 2%, not including maintenance margin, I can theoretically take a 50x levered position. Why? Because I will liquidate 2% lower, not including maintenance margin. It's a little less than that. But point being is all that matters is the position size. If you're trading using leverage as a liquidation point, you are doing it wrong, my friends. You need to be trading with a system and using a stop in place. Using liquidation as a stop loss is not a valid trading strategy. You cannot do that. And the reason being is you're leaving free money on the table to your margin exchange. Whenever you get liquidated, you give up at least, depending on your risk limit, half a base or 50 basis points of margin to that exchange for no good reason. That's free money on the table. So if you had $1,000 account or $1,000 position and you wanted to get liquidated, you want to get stopped out using your liquidation, you are giving up on that $1,000 position $50 to your exchange just for letting them liquidate you. That's the money that you're giving to them by allowing them to auto liquidate you. So stop trading with liquidation, please, my friend. The leverage you use is irrelevant. If your downside risk is 9%, you can theoretically use 10x leverage. If your downside risk is 4%, you can theoretically use 25x leverage. Do not use your liquidation as a stop loss. End of rant. Yeah, I guess that's probably a good spot to end it. We've been here a good hour and 15 minutes. Yeah, this has been fun, man. This has been good. One last question from Julian: is Hyblock free to use? It is. They have some free ports, but if you want to get the liquidation levels, liquidation heat map, check the link in our description. We have a nice exclusive discount with them. So yeah, you go ahead and use that if you want to get interested with Hyblock. So Trip, any closing thoughts as we kind of go into tomorrow?
Not really. I mean, it's very much a wait and see game for me. I think I've identified, absent anything talking about like a qualitative standpoint or fundamentally macro, like just looking at liquidity. I just try to identify things like OP yesterday. Maybe you get the Lido trade. I've been looking at some funding rates on stuff, which is, finding negative funding rates matching up with red deltas. Like, it's easy to say this can't go up, but there are these weird anomalies when things pump. Like I didn't know what XRP liquidity looked like. Why did that thing just rip so hard? So
yep.
I'm constantly searching and scanning just for asymmetric returns or just opportunities based on
that's what you have to do.
The things that I look at. Whereas maybe not focusing so much on the macro side of things. Because these coins have minds of their own sometimes, and it's such a liquidity-driven game in PvP that if you can identify where a move's going to come that is going to remove a bunch of market participants, and you get on the side of that, in and out, take your profits, and then scan and wait for the next one, because the whole game is compounding and just preserving your capital and building the chip stack. So find the system that works for you and have that checklist, and those are where I find my highest probability trade setups. I take less trades because I wait for particular instances where I have conviction in the idea based on past variables that I look at.
Makes sense. With that said, guys, thank you so much for tuning in. We want to once again thank our sponsor, Phemex. If you don't trade with us there, make sure to get started in the link in the description below. We talked about a lot of interesting things today. We did a pretty big, basically, liquidity theory masterclass with you guys. We went over Hyblock Capital, talked about all the different tools and tips and tricks that we use to kind of how we look at the market, how we position, and then again, how we execute. So with that said, I guess we'll see you back next week. Captain Cole signing out.